Hi, good afternoon. Welcome to the marketplace. Coming up, Ghana expected to meet IMF's debt to GDP ratio target for fund program completion even before deadline. Also coming up this afternoon, government dismisses claims that the recent appreciation of the cedi against the US dollar is unsustainable or nearing its end.
Anyway, against major currencies, and so what is happening here, it's not as a result of anything internal. We are just benefiting from the weakening of the dollar. But as you stated clearly, that is not the case.
Well, I had a conversation with competition expert as consumers complain about delays in price reductions despite the stable cedi. Stay with us for details. All right, thanks for staying with us, everyone. Ghana is on track to meet its IMF program goal of lowering the country's debt to GDP ratio ahead of schedule, potentially before the initiative concludes in May 2026 and well ahead of the fund's 2028 target. Here's George with more.
This is based on fresh projections coming from Barclays UK to its investors that Ghana's debt to GDP ratio will reduce to 51% by the first quarter of this year, from 61% ending December 2024. This can be attributed to the city's record performance and the expansion of the economy for the first 6 months of this year. This is the second major target under the IMF initiative that Ghana is achieving even before it ends the fund program. The first was the Bank of Ghana's dollar reserves hitting the required target even before the program ends. All these developments, some analysts have argued that could feed into the current positive market sentiment, a move that could aid in the stability of the Ghana cedi.
Now, government is dismissing claims that the recent appreciation of the cedi against the dollar is unsustainable or nearing its end. This comes amid a rebound in the dollar following an interim trade deal between the U.S. and China and a warning from rating agency Standard & Poor's that the cedi could begin depreciating in the second quarter of the year. But speaking on PM Express, Deputy Finance Minister Thomas Ampemnyako downplayed those concerns.
We've had some people suggesting that the dollar is depreciating anyway against major currencies. And so what is happening here, it's not as a result of anything internal. We are just benefiting from the weakening of the dollar. But as you stated clearly, that is not the case. The dollar has weakened. It has depreciated about 2%, but the cedi has appreciated in all about 16%. And so that shows clearly that we are doing more, even though we are benefiting from the weakening of the dollar. You also made an important statement that I want to reiterate, that the cedi is not appreciating only against the dollar. It's appreciating against all the major currencies. And so that shows clearly that what we are doing is yielding results. The Gold Board, looking at the record so far, from January to date, to April, has been able to export more than $2.7 billion worth of gold. Comparing that to 2013, about 670, and 2023, about 670, and 2024, over 800 million. And so the Gold Board I mean, it's also the game changer. And we are estimating that monthly, the gold board will be doing about $1 billion. That is what we are targeting. And so if all these continues, we are going to see the cedi being strengthened. What is important is not just the downward trend. We are aiming at stabilizing it. And so, yes, we'll continue to push it downwards, but we will continue to implement policies that will make it stable.
Well, the Chamber of Petroleum Consumers is projecting some marginal reduction in the prices of petroleum products at the pumps from the middle of this month. This has been influenced by the city's performance and fairly stable prices of finished petroleum products on the international market. Meanwhile, the Chamber has taken on unionized transport operators over their refusal to review fares despite the current developments on the market. The Ghana Union of Traders Association as well is hopeful market competition may force some traders to reduce prices based on the city's performance against the dollar. Joining me on Zoom, Apia Kusiadmako, Regional Director, CATS International, for a quick conversation. And so we are seeing that despite the city's appreciation, prices remain high. Businesses are not immediately reducing prices, and that's a matter of concern for consumers. Your thoughts? You're muted.
Good afternoon, and good afternoon to your viewers. I think that the recent cedi appreciation against the dollar is something that we must all celebrate. However, consumers are not getting the benefit of the appreciation of the cedi against the dollar, largely because of the way our market is structured. Ghanaian market is largely informal sector. Elsewhere, if, let's say, you were to be living in the Europe or in the US and there's any major appreciation of the USD against other currencies, you could see prices going downward because most of these companies have got what do you call cost accountant. People are monitoring the prices and adjusting them in real time. But in Ghana, we don't have the shops are largely individually owned, and so they try to sometimes hold on to profit, and because also they don't face any severe competition. But one way that we can cause shops to reduce their prices is to get the statistical service to start publishing prices of goods by tracking the goods from the port. They'll be able to know that this is how much it should cost if you add your profit margin on that. Once that thing is done, and the consumers get to know that the prices of, let's say, a bottled water, or let's say a laptop, a Dell laptop of this specification should cost, let's say, 4,000 cedis. But when you go to the shop and it's going for, let's say, 7,000 cedis, it will first let the consumers to know how much the margin, the excess margin on it is. Number two, once people get to see that businesses are making so much profit, that will also incentivize others to also come in to also import and sell. And that alone will also bring down the prices down as a result of competition. So in economics, we say that prices will, in the long run, prices will be at the marginal cost. So we want to see statistical services not just only collecting data for inflation, but also collecting prices and publishing them weekly to guide consumers and also help guide businesses with regards to how they price their goods and services.
All right, one more question. Well, already we've seen that some businesses are slashing prices, and we believe that will drive competition, will force others to do same. But then when you speak with a government, when you speak to others, they say, well, there's nothing we can do about controlling the prices. We have to resort to moral suasion. How effective is that? And is it true that because you operate a free market, we can't, compel businesses to reduce prices?
Yes, it's a free market, and government cannot tell businesses how much they should sell their prices. And so we have to go through moral suasion. But yet, like I said, if government is to use statistical service You know, we have what we call in economics information asymmetry. Information asymmetry is that one side knows more than the other. The seller has more information about how much it costs than the buyer.
Yeah.
But if statistical service starts to publish indicative prices and then recommended retail prices, that alone will cure the information asymmetry. And the consumers will go to the market knowing that they expect this item to be within this range. And that alone will also compare businesses to bring their prices down.
All right. Thank you so much for joining us with your thoughts. Apel Kusiad Marco, Regional Director, CAS International. I appreciate that you could speak to us on The Marketplace. You're watching The Marketplace on Joy News. We are taking a short break. When we come back, we have our exchange. We are talking Diaspora Investments. Don't go anywhere. And welcome back to The Marketplace. Now, as the U.S. looks to redefine its global partnerships, a growing movement among second-generation African diasporans is reshaping economic ties, not through traditional aid or remittances, but through culture, commerce, and connection. From fashion lines to language apps, this digital identity economy is creating new pathways for investment and innovation across the world. Now, joining us is Cedi Appreciation, a researcher exploring how diasporans in America are building bridges to Africa through digital platforms, and she'll be talking to us about her work. Also in studio with me, Amabwachi Dankwa, who is senior strategic learning and partnerships advisor, also founder of ABD and We Consult. Thank you so much for joining us in studio. So I want to begin with you, Cedi, because I mean, you generated this conversation. It was your work that brought us all here. And so you've been looking at diaspora investments. Can you tell us a bit about what you were researching into and what you discovered? I think you're muted, Cedi.
Can you hear me?
Yeah, we can hear you now, loud and clear.
Perfect. Thank you. Yeah, so my research looks at how second-generation Ghanaians, who are also the children of Ghanaian immigrants in the US, UK, and those that had returned to Ghana, to see the different ways that they are maintaining their connections to Ghana, the different actions that they are using. Because there's the idea that children of immigrants broadly, but children of Ghanaian immigrants more specifically, there's an idea that we are disconnected from our culture, we don't care anything about Ghana. And I knew that from my own personal experience, I knew that could not be further from the truth. And so that's what my research set to find out. And I found that one of the ways that we were maintaining our connections to Ghana was financially. There are, I know a lot of people know about remittances, but the second generation, for various reasons, we are less inclined to send remittances. But what we are more inclined to do is to send investing. We are more interested in sending funds that will be used for a wider impact. So that's why we are more interested in investing and things like collective remittances.
Yeah, and Cedi, talk to us about what you found to be the key drivers behind this shift we are seeing in diaspora and giving, especially among the younger generation.
Yeah, so in my research, I found that there were a few key factors that were driving the shift that we're seeing from remittances to investing among younger diasporans. One of the main reasons was that this generation, we've seen our parents and the elders in our communities sending money, and sometimes the money is not always used what it's supposed to be used for. We see our parents sending money to build houses, or for medicine, for hospital bills, to find out that the money has been spent on something else. So there's that fear of being taken advantage of. That's the main driver as to why second generation is not as interested in sending remittances. Another reason is resentment. Again, people seeing their parents working hard, sending money, and feeling that sometimes that money is being sent at their expense. Some of the people I spoke to felt that the money that was being sent to Ghana could have been used to further their own education in the countries that they were living in. So those are two of the reasons why we're seeing a shift from remittance sending to investing.
Yeah, and this is why I bring in Alma, because she has some interesting thoughts about that article. First of all, I just want you to talk to us about the implications of this shifts for aid here in Africa.
Yeah, so I mean, there's a lot of conversation now with, ODA decreasing, sort of looking at the diaspora as an opportunity for increasing aid, supporting NGO work, basically bridging that gap. And Kirsty's article and my own experiences challenged me to think, is that actually true? I think that, as Kirsty mentioned, there are a number of people who are, disenchanted because of their parents' experiences. Mm-hmm. And also, from coming to the continent during December and other things, have seen and noticed things that make them think maybe it would be better for me to actually just invest as opposed to just sending the money for consumption.
Yeah. What do you find to be the problem? We don't have systems that make people accountable. Yeah. Talk to us about it.
Yeah, I mean, trust is difficult. I think, even as Ghanaians who are living here, I've been here 13 years, and I can see that there is a bit of distrust, right, towards the system, towards the government, even towards our banks, because of experiences people have had, services, money disappearing, 419 and Momo, so on and so forth. And I think the country is doing an incredible job, to be very honest, of trying to tackle some of those issues, but certainly there's more to be done in terms of both rule of law as well as on the private sector side to protect financial interests. Yeah,
we'll be talking a bit more about how to build those systems going forward. But Casey, I want to talk to you about diaspora investment models that are scalable, that could help us in developing our economy. I mean, you cite an example about Kwanda. I don't know which other discoveries you may talk to us about it.
Well, this is, I think, one of the issues that we're seeing now, especially in this, I don't know if you want to call it a post-aid world, but as the funding cuts from the U.S., the U.K., and other countries are taking place, we're now kind of seeing a scramble to create scalable diaspora investing models. And so, and as Amma said, trust is a significant issue when with investing, with sending remittances, with sending money back home in general. And so currently, Gwanda is the main one that I know about. I know that there were others that, for one reason or another, are no longer operating. And so we see that scalability and longevity are issues that I think we really need to be working towards.
Yeah, so Amma, how do we build systems that don't just ask for diaspora money, but also their ideas, governance, co-leadership? Yeah.
That one is an interesting question, because there's a little bit of tension there when it comes to anything outside of money, right? I've spoken to a number of Ghanaians who are like, we have the ideas, we have the capacity, we just have financial limitations, right? And so if you just give us the money, we could do what needed to be done. But on the other side as well, there's our diasporans who, through different types of exposure and different types of investment, have been able to extend their knowledge in ways and have networks that could be leveraged. And I honestly think it would first require us to be humble, towards each other, to have an open mind and an open heart. And I through the post that I did actually on LinkedIn, I've discovered that actually there are a number of people who are working on different platforms. People have worked on diaspora bonds, people are working on fundraising platforms, people are working on investment vehicles, through which they can get their returns through, other country financing vehicles. So, I mean, there are a lot of things being done, but it starts with the heart, right? And just like being in a space to receive. At both sides having the humility and the grace to have that conversation, to be honest about each other's limitations, because diaspora also have limitations as well, and then sort of moving from there.
Yeah, and this is pretty interesting because we've been talking about the Trump tariffs and an end to U.S.-Africa engagements in the context of AGUA potentially ending. Kirsty, you mentioned that in your article, and I want to find out, what kind of trade policy would be best to support diaspora entrepreneurs?
So I think, so in my article, as I mentioned, I talked about digital identity economies. And this is how young diasporans are using the internet to connect with their homelands and connect with their cultural identities, and the money, the economies, the ecosystems that are being created from this. It's something that I felt was very important, but was being ignored. And so I wanted to bring it to the forefront. And I think that this is something that could be used to build a new trade policy between the U.S. and African countries, not just Ghana, because even though my work focuses on Ghana, I do a lot of work with other African diaspora communities as well. And I'm seeing this same trend of young diasporans who are really interested in learning more about their culture and willing to spend money, on clothing, on food, on fabric, on going to Ghana or going to their country of origin in December or some other time, maybe during summer holidays. And so I think if we can create a trade policy that is that includes some of these aspects in it, that will also bring it will create a space for both diaspora communities and on the continent to thrive. All
right, Amma, you'd have the last words. You've got a minute. Yeah.
Yeah. No, I mean, I just like Kirsty said, it is an opportunity for us to think outside of the box, to think beyond just like sending money one way, or just this idea that the diaspora can be used in a very specific category, that is remittances. It's an opportunity as well for multilateral and bilateral organizations to rethink what local is, how are the diaspora engaged? How can they be a trust broker? How can they also help to navigate some of the issues that they're having, when they come here, so on and so forth? And how do we co-create solutions sort of together? So I think that's what we're discussing. Yeah.
Great stuff. I enjoyed the conversation. Amma Boakye-Dankwa, who is the founder of ABD and We Consult, also joined us. Kirsten Kwarteng, postdoctoral research associate at SOAS University of London. Thank you so much for joining us and for generating this conversation. Hope to engage sometime soon. And that's The Marketplace. Thanks for watching. We'll be back same time tomorrow.